Hey, good morning, everybody. Welcome to Hump Day. It's Wednesday, June 24th. Glad you could join us today as we get ready to look at this last full week of June to see what it looks like, how we end up the week, what can we expect going into the fourth or the third quarter of this year. So I want to thank you for joining us today as Dave and I get ready to talk about what's happening. There's a few earnings that have come out. There's some other little tidbits that I think will be worth talking about today. So again, thanks for joining us, and we'll be back with Dave in just a moment.
At 5.7 Light FM. Hi, good morning. It's 19 here before 9. That's 8:41 if you live digitally, and it's time to check in on what your money's doing in Wall Street this morning. Well, it's up day yesterday. Law of rhythms might be down today. Let's find out what's going on. Downtown Sebring, we go to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How are you?
Good morning, Dave. How you doing? Well, today it's Wednesday, halfway through the week, and this is the final full week of June. So it's hard to believe the year this year is almost half over.
Oh, Lordy, is it ever. And I didn't even consider that until you mentioned it. You're right. July 4th is the end of next week already, and the summer's going by fast. A whole bunch of junk going on this morning. A lot of it tidbit-level news items, and some of it actually affecting money substantially. One of the things that I noticed is about 2 in the morning, the Dow Jones Futures made another one of those big swings, about a 300-point swing downward. One of my analysts was saying that they suddenly just read all the COVID-19 reports. We had about 3,200 more cases in Florida yesterday. Texas had 5,000 more cases yesterday. The first wave is moving, and you picked up on some tariff news, too, that kind of upset traders, didn't you?
I did. I mean, I'm sure that the coronavirus had a big part to play in that drop in the futures. But the other thing that we saw was the U.S. has started drawing up plans to slap tariffs on $3.1 billion of European goods. So not so much dealing with China now, but now going to the whole European Union. And that's a big deal.
Yeah, my initial reaction when you shared that with me was, oh, goody. Just about the time we're starting to come out a little bit of a big hole of our own, let's choke off trade a little bit and tell everybody they can't afford a Volkswagen.
Yeah, so it's going to be, I'm not sure what that's going to do to our trade balance.
Yeah, it doesn't help us much, and it certainly didn't help the stock market overnight, that's for darn sure. Bankruptcy news out of the big companies. I got word that General Nutrition Centers filed bankruptcy yesterday and said they're planning on killing off 1,200 stores in their chain. We've got one of those in Sebring. Haven't heard a closing list yet, but that's not good news. The other side of the fence, though, is you got some gossip on J.C. Penney's, don't you?
I do, and most people may not recognize that name you just gave, but that's the GNC stores.
Yeah.
Yeah. So, yeah, just want to make sure everybody knew what stores we were talking about going bankrupt there. We did.
I was actually doing my best to do it, enunciating the full name of the thing, Jim. I suppose more people do know them as GNC, don't they?
They do. So, hey, you're right. We did get some news. I'm not sure how far it's going to go or what will end up happening, but Simon Properties, which is a big mall operator, is in talks with another property company called Brookfield Property Partners, and they're looking at options at maybe buying J.C. Penney. And there's a good reason for that, because J.C. Penney is Simon Properties' second largest tenant. So them going away and closing stores is problematic. And then on top of that, you've got Macy's that's kind of been wavering, and that's their number one tenant. So they're trying to kind of solidify that and keep Penny's in that position in their malls.
If memory serves, Simon Properties, the people that were successors in interest to the big General Growth Mall bankruptcy a few years ago, and General Growth was the largest chain of malls out there. I think they used to own the one up by Lake Wales. I don't know whether they still do or not, but parallel that back to the situation on our local mall. I mean, we lost Sears, we lost Kmart, and now we're looking at losing pennies. If I were a big chain of malls, I'd be looking at losing anchors like that and saying, I really don't want to buy a big bankrupt retailer, but in preserving my own interests, this might be a pretty good investment, right?
That's right. You're absolutely right. I'm sure that's what they're thinking. And if they can buy it cheap enough, maybe they even make a profit on the deal.
Yeah, if even running it as a dang loss leader, at the very least, to keep my other tenants alive. So there's a positive to that as well. It might be the only company that would buy a company and say, even if I lose a little money, it's a winner.
Yeah, that's right. And so, hey, we're talking about the overall markets right now. We did have a thing come out yesterday. We talked about it, and that's new home sales. Mm-hmm. And so they actually came out ahead of expectations. So that was a good thing yesterday that kind of helped buoy things up. But I want to talk about something that may not be quite so good. We're getting ready to come to the end of the month, and the end of the month happens to be the end of the quarter, Dave. And there's some talk. I read a whole big article on the possibility, a substantial possibility, that we could see a major sell-off as pension funds rebalance their portfolios after this quarter. We're seeing the S&P up about 21% right now. So they're thinking that there's going to be a mass amount of selling and going out of stocks and reallocating back into bonds. And that number is anywhere from 35 billion to 76 billion, depending upon whether it's Wells Fargo or JP Morgan or Goldman Sachs. They all have different opinions of what this is going to look like and what that correction is going to be. They all think that you need to buy the dip and keep on going. I don't know that's the best thing to do, but that's their opinion. But I think it's interesting to see that we could see a big dip at the end of this quarter.
And we should probably consider it forewarning. Step number one, it doesn't indicate economic catastrophe. It does mean we're probably going to see a dip, but at the same time, it simply indicates a rebalancing of holdings on behalf of some funds that throw billions of dollars around at the drop of a hat.
Exactly. So, but I think people need to be kind of aware of that possibility moving into the end of this quarter.
Yeah, and I get reports on my annuity funds, moving back and forth depending upon how the market is going. Imagine some of the big pension funds doing that at a quarter end. I can see that happening because in my own little IRA level, my annuity keeps shuffling back and forth depending upon the indexes.
Yeah, exactly. So, and that seems to be one of the things that just kind of reallocating, but just people need to understand that's coming.
Kind of a heads up for the wise people that watch the indexes as they are. Hey, you got one major report today from a company that people have heard of, haven't you?
I do. I've got one major report. That's Winnebago. They're the big RV manufacturer. They lost 26 cents a share for their latest quarter. That was a lot less than expected. They were expected to be down about 45 cents a share. Revenue was well above estimates. So even though we had this whole coronavirus thing upsetting everything, their revenue ended up coming up ahead of expectations. Now they're still trading down this morning. I think that's because there's some still unknowns out there of what this next quarter will look like for them. They're down 3.4% this morning.
I honestly didn't know what to expect on something like Winnebago. Yeah, the economy is El Stinko, but by and large, those big RVs are very sensitive to the price of gas, and heaven knows the price of gas has been low, so I didn't really know what to expect there.
Yeah, exactly. Hey, I got one more I forgot to tell you about. And this one, I think, has probably benefited from us staying at home, and that's Lazy Boy. People figured out they needed a new recliner from sitting there so long. They had a profit of 49 cents a share, over double the 20 cents that was expected. Revenue, though, was a little short of expectations. They've seen an increase in production as this whole restrictions ease up and they start to open some of their stores back up. And they're trading up about 0.9% this morning.
Cool. The inventor of the couch potato is doing well, right?
That's exactly.
Hey, resetting the table for the morning. It was an up day yesterday on Wall Street. Dow was up by about 0.5%, up 131. Nasdaq up by 0.75%, almost 75. And the Standard & Poor's was up kind of in the middle of the two, about 13.5. It was a green day, but not one that would make you break out the champagne. Just green ink is always good. We kind of alluded to it with some bad news overnight and some information that was upsetting to the markets. 45 minutes before we start moving this morning, Phillip. How does it look so far, anyway?
Well, we got a lot of red this morning, Dave. A lot of red. We've got the Dow down about 0.75%. We got the S&P 500 down a little over 0.5%. We got the Nasdaq down about 0.25%. And we should mention here that the Nasdaq hit a new record yesterday. So another big day for them on the Nasdaq. Hey, looking at the commodity side, silver's given back everything and plus some that it got yesterday, down 2.9% this morning, down to about $17.55 an ounce right now. Gold not so bad, down about 1/3%. Crude oil is dropped back below 40. It's down 1.5% to $39.75 a barrel.
I got to assume that's probably anticipation of lower demand with the oil traders, wouldn't you guess?
I'm thinking so. Given the looking at the tariffs, looking at the corona increases, I think that they're thinking that. Plus, the other thing we have coming out today too is sometime this afternoon, we'll have the crude inventory number coming out.
Oh yeah, and that means expectations are we got a glut continuing there as well. Overseas markets, Asia was off marginally at the close early this morning, but once the European markets digested what our futures are doing, they're kind of having a sell-off. British markets are down by over 2%. German markets are down by about 1.75% midway through their day. Phillip, advice for stability, advice for trying to make money off of this? We were talking about how the big funds are moving money around at the drop of a hat. We ought to have a better plan than that. How do I get a hold of you to get that plan?
You're right, Dave. We need to have a plan in place to make sure we're managing the risk in portfolios, and that's really one of the main things we focus on. Give us a call at 863-382-0037 to schedule your financial x-ray review. And then follow us on Facebook. All you have to do is look at Statler Financial Services. We'll pop right up. Follow us there, where we repost this broadcast every day. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on Highlands News Talk 730.
All righty. That streams on the web, and we stream on the web, too, at Light FM. And you and I will meet here tomorrow morning about the same time. Fair enough?
Fair enough, man. You have a great day.
Thank you very much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. Again, I want to say thank you for joining us. Want you to know we're here. If you need anything we can help you with, your 401ks, rollovers, anything like that we can be of assistance, give us a call. We're here to help. 863-382-0037. Have a great day. I look forward to you joining us again tomorrow for another day with Mornings with Dave. Bye now.